I'm out, man. Nah, I'm out. Can't do it. I got different skills, man. Welcome to the closing beat, everybody. How are we doing today? Happy Thursday. Me and Eric were just sharing a little tit for tat on celebrity, who you know kind of a thing. Do you know anybody, Cody? Any experiences running into celebrities or any interactions or anything? Who? John Gruden? Well, he's kind of, well, what happened? Oh, he got canceled, yeah. Well, John Daly, we played golf with John Daly that time. Yeah, got the picture to prove it. Well, it turns out Eric was in the movie Dolphin Tale 2. Do you know Dolphin Tale? They filmed it here. That's the only reason I know it. He's in Dolphin Tale 2. I was like, okay, well, what do I got? My friend from high school, it was in Twilight. Yeah. And I think Breaking Bad just for an episode or two. But that's about all I got. Sat next to Trisha Yearwood on a plane one time. Mom made me get her autographed. I didn't know who she was. But, well, we're supposed to talk about the market, really. So, yeah, let's do that today. What's your celebrity thing? You know what I mean? Everybody's had some kind of run-in with somebody. Because... well, it's like the most exciting stock market day, and here we are, right? Let's just talk about celebrities. I should have been doing that yesterday. All right, back to work here. We are financial advisors. We are not e-network or anything like that. We got Wine and Wealth coming up tonight. I've kind of been focused on that a little bit. Got a little sick, so I think tonight I have a couple things. We're going to go over specific options plays that you can actually do on earnings stocks. So I'm going to share with you the earnings stocks that are likely to go up because of earnings, and also have the cheapest options metrics that you can use at the moment to make the most bang for your buck. So we'll go over those because I've got that ready. We're going to talk about the midterms. I'm going to go through every single little thing about the midterms because that's likely the next real focus there. And we're going to talk about earnings as well. So stocks that like Pepsi the other day. That was an obvious one that Pepsi was likely going to beat on earnings, and I gave you all the reasons why. So we're going to go through some more tonight. So it'd be kind of like a hangout, if you don't mind, just in case I get a little sicker. But I've always got good stuff for you, so we'll be there ready to talk about that. Well, the big number today was inflation. Did you happen to catch it? I think everybody was wrong on that one, huh? So 8.26 is where we were. We came down to 8.2. I think President Biden would say that's an inch, right? So we dropped an inch. That's a good thing there. And but not really a lot. Yeah, at least we've stopped inflation from going higher. So if you're looking for a bright spot, you go, well, it's not rocketing higher like it was, but really we need to see a 7 on that, like ASAP, I would presume, if I were the Fed. Tomorrow I'm going to make my case with Eric. He thinks that this is going to be a rough economic time period. I think it's going to be a softish kind of a landing, and we're going to make our cases and sort of duke it out. If you're interested in that one, we will do that tomorrow. Core CPI was higher, and actually, if you care about that, I don't know if you guys care about economic data or not, but it was really rent. I don't have my thing here, but rent was the reason that caused core CPI to go higher. I've gone over this with you in the past, how rent is one of the driving forces of the core CPI number. But inside the normal inflation number, daycare was up 2%, car repairs up 1.9%. You get that, right? Because it's more expensive to fix a car these days. Medical care was up 1%, but declining, I should mention that. It was up, just kind of like an uptick in the middle of a downturn. Car insurance prices up 1.6%. And pet products up 1%, basically. Employee and school cafeteria prices up 44.9%. I've never looked into the details of that. That's a little bit fascinating, but I can tell you we're not going to have a cafeteria here if that sort of inflation is what's going on out there. If we look over at the markets, we have broken the streak. We were down 6 days in a row. We're actually down to start the day. This is a monster reversal. I mean, I don't know how else to say it, but if you are a research member or you're one of our clients here at Jazz, go into the dojo and just search candlesticks. Very simple. I just broke it down. When you look at these charts, you see a whole gobbledygook, a mess, and all this stuff here. But in reality, there's only 13 variations of the colors you see on the screen. 5 of them are green, 5 of them are red, and 3 of them really don't mean anything that's useful in most scenarios, right? So 5 green, 5 red, 3 no color at all. And that's it. That's all you got. So if you're a perma bull, someone that likes to always invest to the long side, you have 5 candlesticks to learn. That is the second most powerful candlestick that you can have by statistic, not by my opinion or anything. And the reason that is because you started the day right here. Let's zoom in a little bit. So here's the open, the bottom of a green candlestick, the flat spot is the open. We sold off, and at one point during the day, picture this, at one point during the day, from here to here, this was only a solid red down day, monster flush out day. But you don't know it's a flush out until you start recovering. You recover half of it. Now people have glass half full, half empty. You recover all of it. You've got a number 11 bar like we talk about in the class there. And then all of a sudden you start going green to where you've erased all the losses and you've gained more than the total loss at one point during the day. This is a 200-point move on the S&P. I didn't even look on the Dow. So on the Dow, 28,635, I mean, my goodness. Is that right? That's right. Yeah, it's a huge move. Okay, so you go from 28.5 all the way up here to 30,000. I'm using the futures, by the way. So 1,500 points. Go Dow. Okay, so you get the gist of it, right? This is not normal, what we saw today. The flush out, like we've been talking about, and then the fear of missing out trade. That's exactly what that is. That's likely what's going to happen going forward. Because now what's happened? People, they saw the flush out, you go, oh my God, I'm going to sell, I'm scared. Then it immediately turns around and you go, ooh, was that such a good idea? Should I have not sold? Ooh, it's getting better and better. Darn it. If tomorrow's a little bit higher, what happens? You get left in the dust and you start going, oh man, I guess I'll get in. Think of all those people that go, I guess I'll get in. That's extra buying. So as the market keeps moving higher and you're like, why is it going higher? Because people are just jumping back in going, well, crap, I missed out on that. So hopefully you didn't make any silly decisions there. I would also point out that my lesson today for you guys doesn't really apply anymore. I was working on this last night. But I'll just tell you what it was. So I was going to show that what we were seeing is as the market made new lows, come over here to June. So as the market made new lows in June, the S&P falls to new lows. Over 250 stocks in the S&P also hit new lows. Clever. So I was going to share that with you and go, isn't that interesting, huh? We go over to September. The market makes new lows, but only 150, not quite 150 names fell. Oh, wow. That's interesting. We go to yesterday's low, which will show on the SPX, not on the futures here. We go to yesterday's low, and only 77 stocks made a new low when the market made a new low. So each time the market's pushing and pushing and pushing, but less and less stocks were going along with it. So I was going to make the case that that's actually a bullish thing, but it doesn't do much good here to share that with you. So we'll move on. Now, let's say you look at this, you go, okay, I'm interested. This may be a significant bottom. It could certainly be this that ultimately turns out to be a rally that fails. You can't discount that for sure. I'm going to get rid of this guy here. We could still be, if you look at this here, we could still be in the middle of a big downtrend that's just accelerating. The losses get larger and larger. The rallies get larger and larger. But in general, we're trending to the downside. So it could be. We don't know. But if you look at this and you say, okay, I'm in. I'm interested in finding some things to do. What can you do? Remember yesterday where I was kind of saying that the kind of semiconductor sector kind of looks like it's going to bounce? Doesn't it kind of look a little overextended and look like it's going to? Remember me joking around and saying that? That's the best I can do. I can't say go buy the semiconductor index or semiconductor industry. I'm not allowed to say that. So I kind of have to do that. Anyways, that's off to a good start. But let's go over here. So you can look at how far sectors have sold off. Remember, you look at the market and you go, whatever happened is interesting. I would like to, what? You would like to buy, you would like to sell, you would like to hedge, you would like to add more to your position. You determine what you're willing to do. Then you go, great, let me look at the individual sectors now, and I am looking for whatever it is. I'm looking for highly discounted stocks, low valuation stocks, relative strength stock, whatever it is you're looking for. You say, I want to find the sector that's giving me what I want. And then, so let's say you want the stocks that are furthest from their 52-week high. Well, that's communication services. So now you say, in a communication services, I would like to go find stocks that I believe in, maybe fundamentally, maybe you just like the companies, maybe you like them discounted, they've fallen apart, whatever it is. And that's how you scan for stocks. At least that's the way I do it, so that I don't spend my day just going, look at that stock, look at that stock, look at that. It's so boring. So one way to do this, if you look, now this is this was last night, right? This is not counting today. But you go, which stocks are furthest off their 52-week highs? Well, communication services, 45%, 44% in tech. If you look at all stocks, not just the S&P, all stocks were 34.9% off their 52-week highs. That's all stocks. Think about how many stocks are out there. So we're trying to categorize them for you, and I'm just trying to give you an idea of how you could very quickly do something like that. Any scanner you could set up if you use scanners or whatever, so that you're not bouncing around going, there's so many options. What do I do? I'm not sure what it is that I'm looking for. All right, you got the, I mentioned the SMH giving you a bounce here today, also looking strong. There's not much that's going to look horribly weak in terms of industries out there. I believe every sector was in the positive today by at least 1%. That is, in fact, that is correct. Right? Why is my chart doing this? Okay, we'll do it like this. Consumer discretionary was the lowest performing sector, but 1% still. If you look over at oil trending a little bit higher here today after this tiny little bit of a pullback. It appears that the U.S. government went to OPEC Plus and said, you guys are going to cut production, and we kind of hope that you'll just delay that by a month. Will you do that for us? And then the Saudis come out publicly and say, what? What are you guys doing? You guys are playing politics with your oil. Do what you got to do. You got plenty of oil over there. Drill. And the U.S. government was asked about this. Did they ask the OPEC Plus to actually delay? And they said, we're not going to have that conversation publicly. Oh, man, it makes us look weak right there. I don't like the sound of that. Nonetheless, oil is higher because it appears that the Saudis have shunned the U.S. and said, no, we're doing what we got to do. You have plenty of oil. Do what you got to do with it. And so that's what's happening over there with the price of oil. Good luck, because it looks like we are headed towards higher prices again for Texas tea, right? I couldn't remember what it was. Energy sector, if you look over there, this is, of course, more than just oil. We're looking to break out over these highs. So far, the momentum is there. The excitement is there. And now the Saudis have given us the green light that energy should be, in fact, showing some strength there. If you look at bonds, this is good news here. Bonds look like they have shown a flush and not quite FOMO day, but they certainly had their flush day. So we're hoping to see bonds at least give a short-term, maybe intermediate term rally. This is in a very tight downtrend. Let me just go here real quick. I'm a little bouncy here. Just let me stick with you, and I'll leave this for us another day. Look at how tight this downtrend is. It won't stick. There we go. Very, very tight and steep downtrend. It will be very quick, this is what this means. It will be very quick before the downtrend breaks. So if we break over this downtrend, you have bond investors, traders, whatever, that are going to find out really soon whether it's something they want to take a shot at buying. Compare that to something like the S&P. Once that comes up here, you have the same concept, right? I can't get it to go where I want it to go, but you get the point, right? Once we break this short-term downtrend, that's your short-term signal to buy, at least people that believe in this stuff. So we're not going to have to wait for the market to come up to some resistance area and see if it attracts more buyers. So that's the good news, right? I'll leave that there as well. All that to say that bonds, there they are. So very interesting bottom there, and really just in time. You got the 30-year mortgage. I mean, it's a 20-year high. I don't know what to tell you. It's over a 20-year high on the 30-year mortgage there. Now, high rates. Who's going to back me up on this one? High interest rates tend to mean lower house prices, but is that always the case? You would think it is, but it's not actually. Anyone study or bought a house in the 70s? Any one of you guys there? I went back and looked at this here. Home prices went up in the 70s by 8.4% year over year for almost a whole decade, with mortgage rates between 7 and 13%. We just got to 7, right? So is it possible for home prices to flatline instead of dropping with these now higher rates? Absolutely, right? Home prices seem to be coming down, so that's not really an argument there, but we are likely to see that home prices slow down because, in a way you can track this, look at the demand for mortgage-backed securities. The whole game is played by Fannie Mae and Freddie Mac. The demand is very, very low right now, which means, I'm not going to make a whole thing out of this, but the commitment rate for Fannie Mae, Freddie Mac, or whatever, is much higher. That means your interest rates are higher. This has nothing to do with the Fed, by the way. So at the end of the day, demand is really low for that, which means your rates are going to stay high, right? Even if bonds bounce here, your interest rates on a mortgage are just going to fluctuate a little bit. So until the demand changes. Well, if interest rates are higher, for the moment, there's that sticker shock, prices will likely come down. And I got way off topic there, man. What are we doing? Moving on. And we'll get ready for the wine and wealth class tonight. Who's ready for a little drink with me, huh? Okay, first up, stocks in the news. There we go. BlackRock. We talked about them the other day. Their ESG initiatives are costing them a lot of money. The earnings were less than expected. Their revenues did come in a little bit better thanks to higher margins. Their assets under management fell 3.7%. And remember, these guys have some assets. This is not little old Jazz Wealth over here. These guys, they're the biggest. I don't know how else to say it. Inflows of new money were 80% lower than expected. So this whole decline here, very much warranted. They're a very smart company. Their margins offset a lot of that decline there. So it's probably why you see the little flush out there. And the market certainly helped today as well. All right, a little bounce in Apple as well. Was it the Digitimes? Yeah, I believe it was. The sale of the iPhone 14 and 14 Plus, they said we're finding that they have weaker sales there. So that's be the start of the downward move today. And then it looks like it was saved by the broad market buying. Chevron in the news. This is that one that was hinting at a breakout we talked about, seems like forever ago. The CEO came out, and he's pretty tough on the government. There's no wonder they're not getting along at the moment. He's pretty tough. He said that our Western governments here have exacerbated shortages through climate change policies and political initiatives. So essentially he's saying, guys, you guys are playing politics with oil. We should all just be doing our work there. There's going to be more of that. It doesn't really matter what we think. There's going to be more of that. Domino's Pizza, better than expected earnings. Revenues came in better, almost better than expected, right in line there. So good enough for a bounce to Domino's Pizza. I believe their margins were a little bit better than expected. We're eating pizza. Yeah. Blame that. Go have a pizza. Delta Airlines, this is going to be earnings related there. Earnings were a little bit less than expected. They did have total sales that were better than expected, and they raised their guidance going forward. Fun fact that I like to look at is the number of seats filled. Right? I go through all this every time the airlines report, but they filled 87% of all seats that flew. They were expecting to fill 86.3% of all seats that flew, and so that's a little bit better than expected. It's not a breakaway or some magic thing there, but better than expected. It gives you a hint as to what the other airlines may be coming out with when they do. Okay, the magic day is tomorrow. We've got Citigroup, JP Morgan, Morgan Stanley, PNC Bank, US Bank, and then United Healthcare. Not a bank, but they'll be in the mix as far as earnings go. It's going to be a big day for earnings and also a big day for Fed members. You've got 4 Fed members speaking around the world. Actually, they're all here in the country. So expect more focus on every little word they say. And that is all I got for you there. A little bit of a shorter one here today. Hope I was still helpful. I will try to answer some of your questions if I can see what y'all are talking about here. Join in and see what we can do there. They're the behemoths there. We have Jazz Wealth here has no desire to be a BlackRock. We will never be them. We'll always just be our little, we hope to get a little bigger, but we'll always be just our little people in the corner, just happy to enjoy the crumbs that are the people that no one else seems to want to deal with, but we like to. Us normal, average people there. Yep. The Southwest Airlines CEO, I remember him saying that. Yep. Who was the other one? Who started Hooters Airlines? It wasn't Hooters. I forget. Remember when they had an airline for a while, the restaurant? That guy said the same thing. That group, I remember saying the same thing. They were like, well, we should have listened to the Southwest CEO. Well, United Healthcare has more money than most banks. Actually, they do. And they ended up with more money because of less claims than last year and the year before and the year before that. So United Healthcare plan participants are actually getting a refund. You may have already been notified about that, but they are getting a refund. Say something nice about gold. It also had a down start to the day, and although it finished down on the day, it still gave you a nice, little bottoming tail there near its lows. Huh? I did it with a smile there. Can you talk about inflation during the holiday season? Is it on average higher during this time? I'm predicting that things will stay the same for the year. I'm not sure what you're asking. Is inflation higher during the holiday season? Well, we would only really get one report before the actual true holiday season. So you'd be measuring one CPI number against, you'd measure them against each other year over year. So I was just trying to think, is that something we can do? We could, yeah. But I don't know the answer without doing a little research there. Hooters Air was real. It was real. Yeah, it definitely was real. They flew here out of Florida. We saw them all the time, but that didn't go well. They did have a casino as well. I used to know, and I still know, as a friend of mine, the designer that ran the design group for them that did all their design for the casinos and the menus and the surfboard menus and stuff they had. She was incredible. Very talented. How much loss of stocks can you write off per year? Aaron, for the most part, generally speaking, you are allowed to have a capital loss. It doesn't have to be stocks. It could be anything. You can have a capital loss of up to $3,000 in a year. There are numerous ways around that, but the general, like TurboTax, I have capital losses. You're allowed to take $3,000 off a year. If you have anything excess, it just carries forward to the next year. So if you have a big loss this year, you'll just write off $3,000 this year, $3,000 next year. It carries forward every single year until you use it all out. Yeah. Can research members see the Wine and Wealth sessions? Not 100% of them, to be honest, because sometimes we're talking about actual planning and things that aren't research or stock driven. Tonight's they will be, right, Cody? Yeah, tonight they will be, because we're gonna it'd be more like a free for all tonight. So if you're in there, come hang out with me. Tandra went long. Oh my God, the market has bottomed. That is it. There you go. Tandra just called. Tandra's been short this whole time. That is officially the bottom of the market. It's got to be, to get Tandra to actually be a bull. Good stuff, man. There you go. You don't need me. Follow Tandra. MW, thanks for the help on that question there. Big reversal tomorrow when the Fed members speak. Well, why? I don't know why that would be. You have one voting member and two non-voting members. So they can, they can be. No, I don't think it has they're not going to have an impact. They would have to change their tone. And if they change the tone, well, how could they change it? They can only become bullish or more, they call it dovish. But, yeah. All right, well, I'm going to leave you here and get ready for tonight's class. Tonight we are talking about option strategies on earnings plays coming up just for fun. If you're looking to do something, you're an active investor out there and you're doing your own thing, you can do that. We're going to talk about the performance and everything and statistics around the midterm elections because that's coming up next. And specifically, we're going to talk about earnings and using options versus stock and how you can determine if there are 5 companies that are going to report earnings, which one is the biggest bang for your buck, even if they're all predicted to move the same, like as far as how much an option costs you in percentage terms. So it's going to be a little bit geeky there, but we'll all just hang out and have a good time there. Good luck if you bet on tonight's football game. I've heard some good things about the spread. I'm out, by the way, but good luck on that one. And we'll talk to you later if you're coming to the class. If not, have a great rest of your day, and thanks for joining us.